now it's on. Thursday, same deal, 8:30, 10 o'clock, and the monthly open should be a good day in terms of volatility. And Friday, 8:30, non-farm payroll, basically. Um, People, I mean, ICT community likes to skip this day, but I don't know. I don't understand the real big deal behind the non-farm payroll, honestly. So I usually trade it. That being said, I'll probably be trading all days besides Monday, live streaming. I mean, but I'm gonna make the announcement in the channel anyways. All right. This is for the indices and the for oil. What do we have? Same deal. No Monday news. No news on Monday. Tuesday after hours. Wednesday FMC. Same deal. Don't touch it on Wednesday. And it seems like crude oil is going down, by the way. But I'm gonna take a look at it in a minute. Thursday, Friday should be fine for crude oil. And obviously we have earnings and revenue this week. The big companies I'm seeing this week. I mean, it's a heavy week on earnings side. So Monday there's pretty much nothing that could affect the market. But on Tuesday we have AMD, Microsoft, and maybe PayPal and Pfizer could affect the market. I mean, AMD and Microsoft will definitely have an impact on the market after hours. And because of that, I think after 3 p.m. on Tuesday, it's not going to be volatile. It's probably going to be waiting and consolidating for the earnings. On Wednesday, Meta, obviously the same deal. And Thursday, Amazon and Apple, big news, big earnings, and Intel. There's also QCOM here on Wednesday. So I would say skip the last hour or even the PM session for Tuesday, Wednesday, and Thursday. Wednesday we have FMC also, so be careful. A pretty heavy week on the earnings side. All right, charts. All right, cool. Charts. I'm gonna start with the daily because what we've been watching is basically a daily expansion. I'm gonna delete this real quick. All right, so cool. So on the chart right now, I have annotated the weekly high, weekly low, but this is basically the weekly dealing range from sell side to buy side. We hit the range EQ and the discount fair value gap on the daily on Thursday. It violated it, but it's still inside that fair value gap. That being said, I'm expecting the biggest pullbacks or rejections at around this area. It could maybe like consolidate a little bit, then go for the buy side. And for buy side, what I want to see is I want to see the range equilibrium of the last leg, basically. I want to see price going for the range EQ of the last leg, which is the daily fair value gaps 25%, which is at 484. But the main thing about this is basically I want to see that kind of retracement early in the week. I don't want to see it later in the week because of the monthly close. So I want to see a little retracement, maybe monthly closes up somewhere here, and then actually, hold on, I said it kind of wrong. Slow grind up right through the Wednesday, and I want to see it reaching up there on or after Wednesday in the form of a monthly manipulation. Basically, I want to see that monthly wick up somewhere here. All right, that's what I want to see them. I want to see sell side distribution. This sell side distribution, I think it's not gonna like violate with expansion more down, but it's gonna be to attack the short-term sell side. I think that's what I'm thinking. I might be wrong. I'm just trying to anticipate something, and the reason for that is because for two reasons. All right, big one, we're at the range EQ of the weekly range. All right, that's the first thing, and second, we have monthly open, so I want to see that manipulation up here, and we had a V-shaped reversal here with no S&T divergence. All right, so I want to see that S&T divergence before distributing all the way down here. So range EQ consolidation or engineer liquidity, run on buy side, fail, and form a second leg redistribution in market maker sell model. So basically this is what I'm anticipating, but obviously because this is a daily time frame, This is not gonna happen overnight or anything like that. It's gonna be probably like within the next 2 weeks, 3 weeks, or something like that. But essentially, this is the chart I want to see. Let me just pull that up. This. So I want to see the short-term sell side first. Then that sell side take us to maybe the volume balance. Maybe the volume balance on Nasdaq, because Nasdaq is the weaker pair. So I want to see it staying below the buy side while ES rating that buy side. All right, that's the idea that I'm having at the moment. Obviously, this can change through the course of this week, but right now, as of now, with the data I have, this is the chart I want to see in terms of narrative and bias, or this. But the first one favoring more, because there's no SMT divergence after the V shape. So either or, but I can see both. Maybe it forms an SMT divergence here without reaching up here, and in that case, obviously, this is the kind of price action we're going to be observing. We also have the daily 3 drives, or I can't say 3 drives, but it formed 3 lows: first low, second low, and third low. That's why I want to see some buy side delivery here. What's this tool called? Oh, that's the Fibonacci. You just got to change the settings. I'll drop it in the chat for you for the settings. There you go. It's basically showing premium and discount of the range. So that being said, I'm gonna showcase real quick the weekly chart real quick, and just to show you guys how it rejected the weekly range EQ. Right now, as of now, we are staying above it with the bodies. All right, so that's something to note. If it's gonna bounce here, if it's gonna form a bearish SMT on the daily level, this is where it supposed to happen. All right, not below, because this is the first potential bounce area, and that bounce will probably induce longs, and people will start thinking this was the pick or bottom or whatever for the next leg, and they're gonna probably get clapped, is what I'm thinking. Alright, so on ES we have the same dealing range, right? This is the weekly dealing range. Alright, so far it hasn't reached down there. Alright, but I'm anticipating it'll go down. Alright, okay, that's why I'm kind of leaning more towards sell side on Nasdaq right now. So if ES goes for the range EQ, that means Nasdaq will take out the wick from Friday, May 31st. All right, but this is obviously the bias. This is not the narrative. The narrative will come with the lower time frames, but ES has more room, and because it's the stronger pair, it has potential to run on buy side, while Nasdaq is rejecting the volume balance on the daily. All right. Well, first I want to see more damage to the sell side before going for the buy side. Ideally, we form a daily order block here. Okay, so 1, 2, maybe 3 up close candles on the daily perspective before taking out the short-term sell side. So basically daily sell side on the short term. I hope that's clear. And in terms of lower time frame, it's the same deal. Once it trades into that fair value gap or the range EQ of the last leg, it needs to form a sound model here before us going short. Do not go short right away or long right away. Same deal. And also, one more thing I have to mention here is, because we are at the weekly range EQ, on a daily perspective, this is the level it needs to engineer liquidity. Like I said, it needs to engineer liquidity and fake out and go for the sell side. This is basically what I'm trying to explain, right? And that consolidation will be on the higher time frame perspective. But the good thing is, because the ranges or the swings are too large, it is going to be, even the consolidation it's going to be tradable on a 1 minute perspective. Because when you look at it on the 1 minute, like the whole consolidation, this is a consolidation on the higher time frame, right? Here, this is a consolidation, but the swings are very large, and because of that, like 200, 300 points, because of that, 1 minute scalps will definitely be doable. Just be careful with the stop loss. All right, let's go down to the 4-hourly chart real quick. There's nothing to talk on the 4-hourly actually, because it was just a consolidation since Thursday. It formed sell side, then basically failed to break down again, and now it's heading upwards as I'm speaking. There's still no bearish SMT divergence on this time frame, so I'm still waiting for that for second stage redistribution on the daily time frame. Other than that, let's that was the hourly chart. Let me go down to hourly. So here on the hourly perspective, on Friday, okay, this is what happened. Top in feels like it should bounce here at the range EQ to keep bullish momentum. That's the thing. So, okay, before I talk about the hourly chart, let me answer your question. So this is what I'm thinking personally. If this was, hold on, let me clear the chart a little bit. All right. If this was the weekly pullback, meaning we're going to be seeing more upside, right? All-time high price action. Price has to consolidate here first, okay? Because it's the weekly chart, right? It doesn't matter the time frame, but on the daily level, this is what I'm seeing. So we have this buy side delivery, then it collapsed, right? We have the V-shape or smart money reversal in the form of V-shape rejection, and it's still going lower, and I can see this market maker sell model panning out basically, right? But if this was the pullback, then in this case it has to consolidate here, or like it doesn't have to consolidate, but it should run on buy side in the form of high resistance liquidity run, which means on the lower time frames it's going to be a consolidation. Like for example, on the daily it's going to look like high resistance run, but on the, for example, 4-hourly or hourly, it's going to look like consolidation. So if it starts consolidating at range EQ and then pops with displacement, yes, then I would say, okay, this was the pullback. Now we're going to have a weekly order block and we're going for all-time highs. But until it does that, I'm going to remain bearish because of the 700 point down close day. And I'm going to anticipate this was just the first leg of the sell model, if that makes sense. Lost. All right, let's talk about the hourly chart. Okay, so on Friday, a couple of things to mention on the hourly chart. First, we had raid. So we had raid. That raid kind of delivered, but it rejected before sell side, right? Rejected before sell side. It raided the down close candle here. Again, now it formed a new raid candle, a bullish one. Now, I feel like this is going to end up being a bullish order block for buy side delivery. And the ultimate target for this will be the previous buy side liquidity. Basically, market maker buy model here on the lower time frame. And that high is the high from Thursday, basically. Now, what could happen is it could potentially form the bearish SMT divergence here as well. That's the part I don't know, okay? I'm not sure if it's going to form the bearish divergence here or up there on the daily range equilibrium. I don't know that. So we're gonna be very cautious. So like after every daily close, I think what you guys need to do, and I also need to do the same thing, just go through the time frames and see where we're at. Like maybe ES takes that buy side, Nasdaq doesn't take that buy side, that forms an SMT divergence on the 4-hourly, for example, right? So which indicates we're not going to be seeing the range equilibrium on the daily level, daily perspective, okay? But if both assets goes for the high, right, like raids the high, and completes the buy model, that means we're going to be seeing range EQ on the daily, okay? That's the point. So this kind of needs to be approached step by step, unfortunately, because I can't say whether we're going to rip through the buy side on both assets or not. By the looks of it, ES will definitely take that high though. I'm not sure about Nasdaq. So on the lower time frame perspective, this is how it's going to be look like. Hold on, let me just pull out the 1 minutes, or maybe like 15-minute. All right, so on the 15-minute, this is basically the buy side delivery, right? So it set the high, set the low, set the high, right? Now we have the dealing range basically from the high to low, right? And it's respecting, I mean, it's trading above the range EQ right now, right? It's kind of choppy looking price action, but technically this basically failed at the thick price action, failed to break below, and instead it formed the order block and going for the buy side. Because of that, I'm thinking this failure at this thick price action, it's gonna lead for second stage buy side delivery on the lower time frame. Okay, and that should target this high at basically like 400. So I'm thinking this was the first stage leg, came down to the range EQ, popped, second stage completed. Now because the second stage on the 15-minute is completed, well, let's refer back to the hourly chart. Now we have this. All right, so I'm looking at the range EQ from high to low. It came down to range EQ or discount, failed. Now this should be the second leg for the hourly chart. All right, that's the main point. So basically, south side of the curve, right? South side of the curve, buy side of the curve, tagging 400s. I want to see that level early in the week though. That's the main thing. Early in the week, set the monthly close. I mean the monthly. Hold on, let me go on the monthly real quick. This is why I want to see it on the early in the week. Before this monthly closes, I want to see this wick here. All right, and that means we're going to be seeing buy side delivery early in the week. That's the main thing I have in mind. All right, so keep that range EQ on the chart, okay, and the order block here. This is basically the order block that it has to keep above basically to reach 400s. Cool. Any questions about indices before I jump onto the other assets? So ideally, again, I'm going to post this in the channel as well, but this is the price action, I mean narrative and the bias I want to see ultimately. All right, this is basically what I'm thinking. Retracement, sell side, then deeper retracement, second stage on the higher time frame, distribution, lower resistance run, second stage redistribution on the daily time frame. Oops. Yeah. Cool. I'm gonna trade Nasdaq in yen. Oh my god, bro, yen. I've heard yen is nasty. I'm gonna quickly go over crude oil, gold, and oh my god, look at that gap on crude oil. Jesus. Alright, so the crude oil, oh fuck, this looks kind of fucked up, not gonna lie. Alright, crude oil at the first leg, then retracement. This retracement looks dangerous though. That's the problem. Like it goes, the order flow is too clean for bearish side, because like I'm looking at it, we had smart money reversal here, then it formed a couple order blocks here, rate candles, then broke down, and here it broke down one more time with another rate candle. So we have a bearish order block at the range equilibrium. So even if it goes for the second stage or second leg, it's gonna have problem breaking above this order block here. So with that being said, I'm not sure if this wants to go for the sell side or not, though, to be honest with you here. And the gap kind of confuses. So here it's trading towards, traded into the bearish or B. I gotta see. So if this is setting up for a second leg buy side delivery, this would be my game plan. I would wait for a break above the rate candle, right, and maybe displacement or an OB something retracement, then I'll go long. But as of now, I would think more sell side delivery. All right, I would think like this collapsing as of now. So that being said, I'm going to set an alert here. If it goes above, I'm going to be watching it for the buy side delivery. If not, This is going for a sell sign basically using the OB. Ugly looking. I mean, I'm looking at the crude oil also on the higher time frame, like for example quarterly chart. This quarterly chart looks very bearish to me. So it's giving me different vibes. So I don't know. I wouldn't trade crude oil, honestly. Alright, gold. Should be bearish. Gold. Let's go on the daily real quick. Alright, yeah. So we had the first retracement, formed an S&T divergence before the range equilibrium and delivered buy side. That buy side, now we have an S&T divergence at the high with silver. This is a bearish S&T divergence, panned out, went for the sell side. I mean breakdown. Now we have a V-shaped reversal with a rate candle here. Now we have bearish OB, the up close candle in this one. Retested that on Wednesday, broke down. Now we have another bearish candle, rate candle with an OB. It should stay below and go for the S&T lows, which is also clean lows basically. So I want to see, as this was here somewhere, let's span it out. First target 2304 should come this week or the next week. For gold, same deal with silver, because gold's bearish. This is the S&T I was talking about. It needs to go for May 2nd sell side, basically 26.58. I'm not trading these assets, but I like to go over it just in case someone is trading. DXY real quick. Let's go over Drake DXY. I'm remaining bearish on DXY still. I think overall the DXY needs to take out the trap shorts just because how it failed at the old traps range EQ or 50% level. I think this was low risk sell first stage, and now it is setting up for second stage. This is where I want to see speed towards the sell side. All right, it is probably not going to show volatility or speed until the monthly close though, so wait for the second part of the week or next week. Okay, euro bearish, I mean bullish, still waiting for the original consolidation buy side. Nothing has changed on euro. It seems like this is going down for the range EQ potentially, or it's just going to pop up from here without going down there. Yeah, I mean implied range looks nice with this fair value gap, honestly. But I'm remaining bullish on euro for now, and GU as well. GU is even better because it's more strong. It's stronger, and it completed the buy model. Has more room to go though. I want to see a breakout from that level. Probably rejects there though. I mean it takes that high but rejects it probably. We'll see. Same deal. So Euro GU, I'm remaining bullish. And since you're here, Joel, yo Fariz, what's good, my man? I haven't seen you for a while. I hope everything's good, bro. Can you please take a look at Bitcoin? Glad to see you back, man. Glad to have you back, brother. Bitcoin, yeah, for sure. Let's go over Bitcoin. All right, Bitcoin, all-time highs. I mean, I charted the Bitcoin already, so everything is on the screen right now. So we had a rate candle here. I'm gonna zoom in. This is why I was bullish at the consolidation here. So first, sell side rated. We traded down into discount, right? And this candle didn't have a manipulation, so it offered both buy side and sell side. Basically, you know, delivered the price at that level efficiently. Rejected and swept the down close candle. Remained above. This is now an order block with the rate candle. Use its mean threshold to rally the first buy side. It was knocked out, and now it's still going for more. So I'm thinking at least, I mean, I don't know about the all-time highs, but the old S&T divergence, which is the original consolidation, at least that level needs to get tagged, which is 72k. And my thought process is like this basically: if the original consolidation is close proximity to the actual buy side, I think it's gonna just rip through that level. That's my thought process. So here I'm thinking the range EQ was tested, we had a huge wick, right? So that wick essentially is a fair value gap. Held it above its CE, had another breakout, came down to range EQ. It formed a new order block with the raid candle here. So here, this is the raid. Now 1, 2, 3 down close candles. Once it goes above, now you have the confirmation, and by the looks of it, it's respecting the mean threshold of that OB. All right, so the idea is OB low, which I'm gonna annotate it with red. Okay, OB low, which is 65,111. That level shouldn't get traded into anymore. From here, I would expect buy side delivery without any further damage. All-time highs. I hope you guys have spot bags in this. Looks nice. Looks very good. Like it's following the TA at the end of the day, and we have bullish SMT divergences as well with ETH. The only thing I don't like about Ethereum is the lows. Like the lows are very clean here. It rated it, but I'm thinking, is it enough or not? Because I don't know. It could come down there and sweep it, then rally. We'll see. I mean, at the end of the day, obviously, if Bitcoin will go for the all-time highs, I don't think Ethereum will drag down Bitcoin, honestly. Even if it takes out the sell side one more time and then rallies. Looks really different though. Like when I used to trade crypto, Bitcoin and Ethereum didn't look this unsynced. Like right now, it's looking very. How can I put it down? Like it seems like it's not even correlating or whatever, because I'm thinking like Ethereum. I'm thinking bearish delivery, and on Bitcoin, I'm thinking bullish delivery. So here, for example, this accumulation on Ethereum looks like a trap for me, and right now we are testing the trap fair value gap, and we have clean low. So on Ethereum, I want to see that trap fair value gap holding, sell side delivery, and then go for the buy side on Ethereum. On Bitcoin, on the other hand, I'm literally thinking spike up from here without going for even the daily fair value gap, because the mean threshold already got rejected here. So that wick's low shouldn't get traded anymore for a clean order flow. But maybe if Ethereum wants to go for the sell side and Bitcoin consolidates here, I think Bitcoin will pop once Ethereum takes the sell side one more time. But seemingly Ethereum is getting weaker here comparing to Bitcoin. The fade range breakdown should be super bullish, right? Yes. Interesting that ES and NQ are dumping while Bitcoin. This dude, oh my god! I was talking about this a couple weeks ago with Fabio. I think I was saying like, bro, when I used to trade crypto, I could literally just like pull the trigger on my positions on Bitcoin by looking at ES or Nasdaq because they were correlated. Now it looks like for the whole year actually, it looks like they're they're inversely correlated. So I feel like whenever the market is bumping, Bitcoin is dumping and vice versa. It's kind of like cash flow, I think. People are taking out money from the market and putting in crypto, then pulling out from Bitcoin and putting back in the market. It's just like a cycle, you know what I'm saying? Which is smart, by the way. I mean, when I think about it that way, it's really smart. If I was a financial advisor, I would probably advise the same thing. Rotations, exactly. It seems to be a lag between the two. If NQ pumps, Bitcoin will pump later on. That's another thing, yeah. But yeah, basically that's what I'm thinking. Like I think the cash is flowing to the stronger assets when the other asset is weak, basically. So NQ basically going for the sell side, now Bitcoin is going for the buy side. So let's flow the cash into that asset versus the other, because people don't like to make money on shorts, or they don't know how to. I don't know if that makes sense, but like I'm obviously talking about retail people. I'm not talking about institutional levels. All right, cool. I wanted to go over one more thing, I think. And guys, don't worry, I'll be posting these charts after I paint them all in the channel as well, just so you guys can refer back to it on demand. Not stocks. Watch list maybe. DXY check. Euro USD check. GU check. Bitcoin check. Futures check. That was it, I guess. Oh, 6JU. Just remember 6JU. Damn. Shit, it looks weird. Wow. It must feel good to be living in Tokyo. Joe. I don't know what to think about this though. The daily traded down. So the daily IFED. So we have a lot of sell side, buy side wick here, but the IFED below the down close candle into a fair value gap. This should deliver more bullish, like more buy side here. It seems like maybe. Hold on, let me see the weekly. This candle's highs looks cool because it lacks manipulation. Seems, and there's a gap also. I feel like it wants to go for a buy side from here, honestly. But it could also consolidate. So, but I don't think it's gonna deliver a sell side here. Just looking at the higher time frame, because we have a V shape here. Like basically sharp return, sharp reversal, sharp rejection, whatever you call it. I would bet on long setups on this asset. Maybe 3 drives though on the 4 hourly. It could come down one more time, then rally. Let's see. Retail does not know what a short is. That's a fact. I was talking about when my dad, my parents were visiting a couple months ago. So I was talking with my dad, and he knows how financial markets works, and he made money from financial markets himself. But like we used to, so I took them out for brunch, and he asked me like, oh, the market is plummeting right now, like does it affect you? I'm like, don't worry about it, doesn't matter, like I can make money on shorts and longs, doesn't matter. He's nice. They're baffled when you explain that. You can exactly, they don't know, but I get that, because at the time, like my dad is like he was born in '66 basically. When he was trading financial markets, like they didn't have the tools we have right now, because that's why they only knew how to buy, not sell. They watched the movie Big Short, but I don't think they understand what is actually happening. That's so true. A longed, nice. After being in Discord, BTC, SMT breaker, set up some 50-minute. Dude, like Bitcoin on any level, on any time frame, is actually really good money with leverage. Like, let's go down to 5, even 5-minute scalps, right? Like for example here, sell side taken, displacement. Now you have the range EQ. I don't know if it tested it, but let's see. It didn't test it, but usually you can, maybe there's an SMT there. Let me see. 5 minutes. I'm sure there's an SMT, because whenever a market, an asset doesn't go down to range EQ, it usually forms an SMT divergence in premium. So where's the right? Yep, there you go. Bullish SMT. So you either wait for range EQ or this. Once it's there, go long, target the first buy side, which is here, and call it a fucking day. You know, that's literally like, and how, like in terms of percentage, let's say you long after the SMT confirmation, it's almost 1%. You know, I think 1% with even like 10x leverage, I'll take it all day long, honestly. And this is the second leg basically, which is the impulsive move, more like bigger expansion. I wish I had my Coinbase account. I would have traded just for funsies on weekends only. I would have traded leveraged Bitcoin, but motherfuckers just freeze my account for some reason. I can't trade crypto anymore. I have to go to Turkey to get my fucking paperwork to reopen my Binance account. I think that's my only bet. Bluefin, I can't get into any leverage crypto accounts. Bro, I don't know. Like, I don't trust those exchanges like Mex, C, or whatever it's called, or KuCoin. I don't know. I don't feel safe with those exchanges like Bluefin. I've never heard that one. Oh, there you go. Yeah. I know, Joel, you're a big fan of Mex. I know, bro. I I remember seeing your Instagram stories a lot with Mex C. I don't know, Mex C. I've heard a lot of sus stuff about them. Not recently, but when they first launched last year. So basically, oh, they're not U.S. anymore. That's interesting. They're all sus, brother. I got scammed in KuCoin once, and that's when I called it a day with KuCoin. It's the Max was for makeup. That's funny. But yeah, man, like you don't even need 5 minutes. Also, like you can do the same thing if that works for you on the 15 minutes, on the hourly, like whichever time frame you want. You can do the same thing on the daily level. Like it's literally the same thing. Um, and like here, let me see what we have here on the 15 minutes. Or you can do it on the 1 minute with 10,000, not 10,000, but 1,000 leverage on Rollbit. No, don't do that. I'm joking. Let's see what we have here. There's an SMT here, right there. Boom, 15-minute SMT divergence, and then it went for the buy side, the first buy side. This is basically a scalp. Like you're not guessing whether this is going for all-time highs from here or not. You just take the low-hanging fruit objective and call it a fucking day, you know. And with that money, you grab your lunch or get a beer, whatever you like to do, you know. But it's clean though. It's clean. There's the rate candle into fair value gap. That's the long. Boom. If it delivers. Man, I need my Coinbase account. Let's do the SMT breakers all the time. I just don't know where to try it yet. Everything geo logged in California. I mean where to try it in terms of like brokers or exchanges, or are you talking about time? Yeah. Uh, so Fabio, he's trading still trading crypto, and as far as I remember, he's using shit. Um, hold on, I don't remember actually. BingX, I think. So I don't know if it's still in U.S. territory, but if it is, that could be a. Yeah, you're locked out. What did you do, Fariz? That's fun. That's bad, bro. Getting locked out from brokers. That's low key funny. Not gonna lie. Oh, it's locked out from Cal. Okay, got you. I thought it was just like you. Yeah, I don't know. I can sell you my ID. You can get KYC'd with Binance. I can give you my Turkish residency paperwork and ID. In return, I'll probably ask you to wire me $500,000 something. I'm kidding. Yo, Furry, since you're here, let me ask you. I had a class on Monday last week. If you haven't gone through that, check it out. You might like it. It might not resonate with you, but just check it out. If it resonates with you, take it home. It's super simple stuff. Bet, bro. That's for sure. The chart time is never ends, man. Like you get chart time, maybe like a year, then you realize you need even more. Then it becomes 2 years, then you realize it needs even more. I mean, I feel like it'll never stop. You know, the learning curve never stops. I mean, I think that's how just life is. You know, we're always gonna be students of life, honestly, no matter what we do. That's why I don't like. That's why I don't like traders with big ego, as if like they're fucking like they're fucking algo itself. I mean, like, come on, bro. You just learned. Chill. Market humbles everyone. It's like, bro, that's so true. Like you lose everything, and that means you learn something if you're not an asshole. And if you don't repeat the same mistakes, you're gonna get your fucking money. That's what it's all about. Like, do not do the same mistakes. Don't be that stupid. Learn from it. That's how we grow, you know? These ICT videos are mostly the same to me on YouTube. I mean, 2022 and maybe like 2023 live sessions are good. Other than that, like core content and all that, you know, skip it, bro. I mean, that's my opinion, though. You don't have to. That's just my opinion. I did not go through core content, and I don't have to. Again, like, cause the more you, sometimes the more stuff you learn, the more you overcomplicate things. Sometimes all you need is a fucking SMT divergence and a dealing range. Like, seriously, let's be real. Or whatever you're using. It doesn't even have to be an SMT. Maybe like you're good with elite waves. It could be something with elite waves. You know, it could be anything. You know, whatever works. But the less you know, or not the less you know, but the less you apply, the better. You know, you don't have to apply Reaper fair value gap, IFVG fair value gap, OB this that, bro. Chill. You can know all of them. Obviously, you can know. It's not gonna harm you, but using them all together, that's gonna harm you, and that's analysis paralysis. Like, take the easiest things for you personally, and try to try to sharpen it. You know, all the big traders, they still are students even after, for sure. But I was just talking about this literally on, I think it was Friday or Thursday. I was saying, like, on the live stream, the market, the indices, it's very volatile right now. Like, we had a 700 point down day, which has never happened before. And when you watch the 1 minute time frame, you see like 30, 40, 50 point candles every day right now. And I'm like, all right, you know what, I cannot stick to my stop loss rule, which is, you know, 12.5 points or 15 points tops. And we have to find a way to adapt to these markets. Even right now, like, we are actually observing some sort of change in the financial markets in terms of the algo or whatever you believe. So you got to find a way to adapt those things, you know? And that comes down to your statement, which is very true. Like, yeah, all the big traders, they're still students even after 4 years. Like, that's just how it is. Like, the market, it's like fucking nature, skydiving, climbing mountains, or deep diving. You can get served. I was talking to Killa about watching 2023. It's like reading 2 weeks old. 2023, I would say the recorded content is okay, but the live content is pretty good, because you get to see someone else's thought process in the live markets, and you can learn something from that. That's why I said, like, the live streams from 2023. That's what happened to me when I got so overwhelmed with all the ICT content. That's the thing.